developers to move your project along or to start your co-op up. And we're happy to partner with co-op developers and have strong relationships with many of them. So you might ask, what can we invest in? So when you think of what a need between 50,000 and 1.25 million, what we can look at doing is we can look at doing loans. So those can be shorter term bridge loans, so 12 to 18 months to help fill a need. Say if you're looking at doing a housing co-op, that could be to help with some of the construction financing. It could be an additional item that you need to add in that maybe your primary lender can't do. We can help finance equipment, mortgages, and really talk with me. You can happy to connect with you after on other things that we can do for loans. We can do quasi-equity, which if you haven't heard of that, what that is it's if we defer principal payments, if we do graduated interest, so potentially lower interest rates up front or higher interest rates as the risk is higher, and it can be lower as the risk of the loan decreases. We can also do equity. So if you're looking for a capital injection into your business to move that along, this is absolutely something that we can do. We do want the funds back at some point, so 5 to 10 years, or so we will ask, even on equity, for a clear idea of how this will be repaid back to CCIF. But as true equity, it would sit on your balance sheet different if you are looking to grow the business and get loans from other partners. So we can invest across Canada, so from coast to coast to coast, and we are not sector specific. So we have invested in several different markets and subsectors within Canada, including affordable housing. We've looked at renewable energy. We've invested in the food sector. We've invested in recreation. So we invested in a climbing gym. So really I've looked at a wide range of co-ops and invested in a wide range of co-ops so far, including startups, growing co-ops. So as you think of financing, I wanted you to think of the different types of financing that are out there, because there's not just loans. And I know some of you that are on the call are looking at raising funds through ODC. So I did want to add in kind of the new donor. I just got muted. Thanks, Beth. So the new, sorry, I said I know some of you are from ODCs on the call, and so I added in the first piece of new donor sources, knowing that some of those funds would be coming potentially from community members, but you can also look at doing loans. There's ways you can do community bonds. We can look at doing equity investments and then outcome financing. And as this progresses, it really, we look at a risk return impact kind of summary, and so this progresses as it moves along. So some being less risky, some being more risky, and that can kind of affect the pricing of a deal and repayment structure. So as you look at the different financing, different types of financing that I just presented, what you're really going to want to think about with your board and is what financing approach is best for your co-op, because it differs. Loans are often a great source, and CCIF does provide very innovative, creative financing to help match what the co-op sector needs. So we're absolutely there to help with that. But as you think of your financing needs, think of what you're looking for, and think of our grants best, our community bonds best, our loans best, equity. That's something that, you know, I'm happy to have a conversation with you on a one-on-one basis about, but it's definitely something to think of. Also understanding each of these different approaches to it and knowing how to handle that and how your co-op could thrive or not thrive from that. Do you guys have any questions so far as I move into different topics on this? We will have a question and answer period at the end that I will, you can save your questions for as well. So I think one of the most daunting things when people when they apply for loans, whether it's a business loan or personal loan or whatnot, is what we look for as a lender and what we're going to ask for. So I thought it would be helpful to put a list together. Yes, it seems long, but I would rather have you see it now and look at the different things that we actually look for. So you'll often hear me ask, do you have a business plan? Business plans are one of the best ways for you and your co-op to sit down and really put together your thoughts on paper and where you want to see it go. I'll ask for either financial statements if you're an existing co-op, or I'll ask for financial projections, because when it comes down to it, we are doing a financial transaction, and so I will need to understand how this will be repaid. We also look at, who's on your board, the strength of your board. Do you have other lenders as well, or I say funders because it could be community bondholders or other partners like that. So just wanted to give you, a list of the different things that we're looking for here to really summarize that. Also have a clear idea of what you want the loan for. So, I do present all of my deals to an investment committee, and they're going to ask me the same questions that I ask you. What are the funds for? And have a clear idea. And if they are for, to grow the business and really for cash flow, then describe in your business plan how do these funds help improve the cash flow short term to make the co-op stronger or keep the co-op thriving. And if it is a startup, then absolutely explain that and show how that initial cash injection will help give you enough financial strength to start generating a positive revenue and really ultimately a positive net income. So you sent me all of the information on the previous slide, and yes, it does take a bit of time to put together. But what am I actually looking for when I sit down and I say, I'm here and I'm doing your financial analysis and I'm reviewing all of your documents? So what I sit down and look for is I look for accurate reporting. So I do look at the financial statements and I see if they're audited or not. If they're not, then that's okay, but definitely do review those and make sure that good accounting practices are being used. I take a look at the business plan. Is it clear? And is the business plan around what the lending need is? Or is there a piece of that that's in there that explains how, the $100,000 or $500,000 cash injection from CCIF will help the business grow? Because I would say 90% of the loans that we do are to help co-ops grow in some capacity, whether it's from the ground up or whether it's, to add an additional piece of their business. This is the really big focus that I see funds used for. So while we might all have a 10-year plan or 5-year plan of where we want our business to go, it's really important to do this in kind of bite-sized increments. And make sure that when you're asking for funds, you might need $10 million, but are there kind of bite-sized steps that you can take to get yourself there? So is there a way that you could start with $500,000 to do the first stage, and then, we can work in stages to get there? So make sure that when you're doing your business plan, that it's thoroughly thought out and it's really done in achievable kind of shorter term milestones. And as you're doing that, it makes it easier to build out your projections or to show from your financial statements the repayment ability. So as you grow, if you're planning on major growth, then we would want to see projections that are reasonable, that demonstrate that with the growth, you're able to make the payments, and it's not putting the co-op in a financial burdensome state. So definitely looking at how you expect to repay that, and is that possible, and budgeting for that. So as you're doing your projections for the project, make sure that the interest, the amortization, if there is any, that all of those are built into your budget as well. And also, it's good to, which I do see often, if your first line of repayment goes awry, say that the revenues you expect to generate from the business are not as much as expected, thinking about a backup plan and how you would work to make sure that there's another plan in place to keep your co-op growing and strong. So as you looked at that list, some of you were probably a bit overwhelmed and said, wow, well, we don't have all of this. And I don't want that to be daunting. I just want to share what we do look for and what will be asked for. So if you don't have all of these documents, that's okay. And we can still absolutely look to work with you. But if there's areas, definitely highlight your areas of strength. So if you have a really strong board and that has a ton of experience in this startup area that you're looking to start up, that's a huge advantage. Say you're looking to start a new bookstore and your board member is comprised of someone that owned a bookstore before. That's a great strength. And so build on those strengths, and those strengths can often help mitigate some of the weaknesses within a business plan or business. So we're happy to look at that, and just wanted to share that with you. So now that I've shared all of the documents and kind of what CCIF can do, it's really on you guys to start thinking about what your first steps are to acquiring the financing that you need, and thinking about how you can be very clear on what the purpose of the loan is that you need, and how you would plan to put together all of the information that would be required for that. You will need a business plan, and so ACCA is a great resource to help you with that, or help find somebody that can help you do that. And so definitely lean on them and their expertise there to help build. And then the other co-op associations as well in Manitoba and Saskatchewan are there to help as well. So just be mindful of that in building your business plan. And one question I can pretty much guarantee I will ask you in our first initial call is, do you have any collateral? And what I mean is, if the cash flow of the business doesn't go as expected, or the revenues aren't coming in, so you're not selling as much as you expected, what is the backup? And often it is some form of collateral, whether it's a building or equipment or other tangible items. But we've absolutely financed other businesses that do not have collateral. So just know that we can look at that, but the collateral does help, but we don't require that at all. So is every co-op loan ready? No, they're not, but we absolutely want to work with you between the co-op associations and CCIF to help get you there. So if you are ready, that's wonderful, and I'm happy to schedule a call. If you're not, then use the list that I provided in this format to think of what you do need to get there, and have a conversation with myself, and we can talk about what is required to get you there. There's also some other great resources that have been rolled out that I'm happy to share if you feel that that's the where you're at in the process, is that you need additional resources. So I'm happy to share this on a one-off basis. So really the next steps, and then I'll open it up for questions, is I did want to pose to you as an organization, as a co-op, everything that I've covered. It's a lot of information, from what CCIF does to how to assess what your needs are, to how to really fill out a loan application and what the documents are looking for. And then really, sitting down and having a whole exercise and figuring out what it is that you need, and putting this whole exercise together so that you are loan ready, that you can reach your goals, and having clear goals on how to achieve those. And so I'm happy to discuss more about that, but really wanted to leave you with, think about what it is your co-op could use loan, fund, or equity for to reach your goal, and if that would speed the timeline up for you to reach that. Often it can, and make, achieving a goal that without funds you would achieve in 5 to 10 years, you could achieve it up, earlier, and it would be beneficial to the co-op. If there's challenges that you anticipate, be upfront about those, and we can talk and see if we can help strategize to figure out how to mitigate those. But you guys are also the experts in your field, and so make sure that you're thinking of those as well. And then, really talking with your board and making sure that your board has a clear understanding about, making the decision to borrow and what barriers that you might face in this whole process. So I know I covered a lot of information. I do want to open it up for questions so that, we can cover a lot of this information. So I will hand it back to you, Seth, to open it up. So if people want to either type it in the chat box, or if they dialed in, they can ask the question. Is that the best way to do it, you think, Seth?
That'd be great. I forgot to unmute myself. Thank you, Christina, so much. That was an excellent presentation. I have some questions that are here, and it seems like we got an audio issue with Gerald, but hopefully we can sort through it. Okay. Actually, I'm just going to mute the, we're just getting a bit of feedback. I'm going to mute the lines here, and I'm going to read some of the, sorry about that, everyone. So I was just saying, I'm going to mute your lines for just a second. There are some questions that are in the chat, and I will have Christina respond to them. I'll just unmute her line and read them out here. So
thank you.
The first question, so is, can you explain impact financing?
So I can give a high level overview of impact financing. Impact financing is really socially purposed funds that are put into the community to have a positive impact. There's several different ways to measure the impact in the community. The one that CCIF uses is through the Sustainable Development Goals, and we have a whole tracking system to measure the impact that each co-op has through those. So it's really high level, but impact investing is really doing positive good from everywhere from the investor investing the money into how that is being deployed to the investor, to the borrower.
Excellent, thank you. And maybe so that's great, and I can see that opening up some other questions, as well as people thinking of their co-ops, of how they fit in, how their co-ops make an impact. I think especially with the opportunity development co-ops on the line, that is definitely a guiding principle, and seeing, perhaps even just the materials that CCIF has to be able to use that as a bit of that education and awareness building. The second question here, and maybe this is going back to your slide about increasing risk and complexity. Would you be able to explain a bit more and understand and build, I guess, a little more understanding around the different approaches and why a group would use some of those different tools? So I'm thinking of the slide with the arrow around
of course.
different mechanisms.
Yeah, so really that's a decision partly that's based on the stage the co-op is in. So oftentimes in the very beginning stages, it can be challenging to receive financing from, a fund like CCIF or credit union or bank in the very, very early kind of concept startup stages. So that's often a time when the risk is much higher. And so a way to raise funds is often I see in co-ops is reaching out to, the key co-op members, but also reaching out to the community to raise some of those additional funds. And so that would be one of the reasons for starting with the first one on that slide, which was new donor sources. From there, once you really look to build out, you can look at equity investments. Equity investments, often not with CCIS, but oftentimes an equity investor will want a percentage of the co-op, which can be challenging with the structure. And so there's other ways of doing that. And so it's just a matter of how much ownership the co-op wants to have and whether they're willing to give any of that up. Loans are kind of the more traditional format that more people are comfortable with, where you borrow, $1 million and you pay it back in monthly principal and interest payments over 5 years. We can be flexible with some of that. So it really depends on what your outcome is that you're looking to achieve in those bite-sized increments.
Awesome. Great. Thank you.
Yeah, you're welcome.
Great. Okay, here's another one. I imagine you can see them, but I'll read them out too. If a co-op does not have a track record of successful projects that they have pursued, is the likelihood of obtaining financing for a first project reduced? So new co-ops, no track record. What are they dealing with, and how are you assessing them?
So what we look at is we look at the kind of the risk, the potential for the funds to be returned, and the impact in the community are the way that we assess every co-op potential. So, I mean, the short answer, and then I'll go into a more detailed one. The short answer is, if you have a strong track record and have done multiple projects, the risk of financing is lower, so the likelihood is higher that we would do the investment. But we have financed a startup with no previous track record and no necessarily success at the projects that they were doing. But like I said, they had strength in their management team. This was the recreational one that we financed. They had a lot of strength in the area, had done significant research to demonstrate that they could be successful, and had high quality projections to back that up. So you would have to do a bit more planning to get to the point of being financeable, especially if you have expertise in the area previously. That absolutely increases your potential of receiving financing. The CCIF is in place to help finance startups as well.
That's really great. Can I ask a follow-up question to that?
Of course.
Great. So with how did they communicate that management capacity in their business plan, or being able to show that to you as a lender, and how did that differentiate them from, say, the other projects you were looking at?
So having previous experience that's transferable is something that is excellent to highlight. So say, like I said, I'm going to go back to say you want to open a co-op bookstore. If you previously worked as the manager of a chapter, you probably have significant experience running and knowing kind of the ins and outs and the strengths and pitfalls of running a bookstore. And so that is a huge asset that could be highlighted. Does that answer your question, Seth?
Great, thank you.
Yep.
Okay. All right. Here's another question from Rocky. How do CCIF rates compare to the bank, and is strength the rate or ability to lower risk overall?
Can you repeat that one more time? I just wanted to make sure I understood the last portion of that question.
Okay. It seems. Oh, I guess, yeah, maybe, I don't know, Rocky, maybe do you want to rephrase that? And then the other is here, there's another question from Patty. So why don't we do Patty's, and then if Rocky, you want to just take another crack at it. I think I know where you're getting at, and I think it is a good question. Patty's asking, can you discuss the terms for loans and the range of interest rates and what influences those rates and terms?
Sure. So the terms of the loan, like I said, we do provide innovative, flexible financing. So the terms of the loan can vary. We can do shorter term bridge financing. Like I said, that could be anywhere from 12 to 24 months. Typically a typical term loan would be 5 years, and the amortization would match what the collateral of that, what the collateral is. So if it's equipment, or if it's a property, or if it's cash flow lending and matches the project. So that can vary. And we have, a very variable kind of term within it. And I think that's part of what differentiates CCIS is we don't have a, hard and fast fixed term like many credit unions and banks do when you go to them. When it comes to the rate, right now our rate is anywhere between 5.5% to 8.5%, and that varies on the risk, the return, and the impact that the co-op is having.
Excellent. Okay, this is great, and that's a great question, Patty. I imagine a lot of people on the line had similar questions around those details. So pretty important stuff. And thanks, Rocky, for reformatting your question. I think this sounds great. I don't think it's a dumb question. There's no dumb question. So does a CCIF loan combined with a bank loan lower risk from the bank's perspective? It is your rates that are attractive, or your SDG commitment and overall makeup. Yeah. So kind of between those things.
So we have partnered with a credit union previously on a deal to help a housing co-op add an additional piece of equipment that they needed. And so it was more the structure of the loan that was needed. I wouldn't say that because we're working with a bank or credit union that necessarily lowers the risk, but it can if that is broken out, because we wouldn't have as much exposure. So if it's $1 million deal and we split that, then we'd only be exposed to $500,000 in potential loss versus $1 million. So it can make a deal easier to do, and we're happy to work with our partners to what we call either do a loan pair pursue and be a co-lender with someone. So that's absolutely something that we're happy to look into. The SDG commitment is, it's really, I wouldn't say the SDG commitment is something that we're actually getting from each co-op that we work with. And so that's something that every co-op that works with us is doing on their perspective, and we're compiling that. New Market Funds, who is the fund manager I actually work for, we are a B Corp, and so absolutely follow and try to hit as many of the SDGs as possible. And so that's our overall makeup, as well as CMC and many of our credit union partners are looking to have a positive impact within the community.
Excellent.
Did you guys have any other questions about financing in particular that you would like to ask, or feel free to type in the chat. So what else, if not, what I'll share with Seth to share with you guys after all of this is it's not necessarily related to CCIF, but it is related to helping you guys put together business plans and financing. And I've shared this a bit with Seth, is the investment readiness program and the overall social finance fund that is in place to help provide some grant financing if you are in the earlier kind of startup phase of your development. And then also the IRP is there to help with business planning, feasibility studies to make you more investment ready. So I'll share that link, and I'll have Seth circulate that after the call. It looks like Paul had a question about, do you syndicate loans and share so the question is, how do you syndicate loans and share the risk / collateral with other lenders? So that depends on who the syndicated partner is, because we're willing to work with them. So say the project was $3 million, we could look at doing, say, $1 million of it, and the other partner could look at doing $2 million of it. And what we could look at doing is breaking that up so that as you know, the borrower, so the co-op, pays back money, it would be paid back on a 1/3, 2/3 basis, so that it would be equal. And if for some reason the co-op were to have financial struggles and not be able to ultimately repay the loan, and assets had to be liquidated, the assets would be liquidated and paid back in that same scenario, where say CCIF would get 1/3 of the assets and the syndicated partner would get 2/3.
I see there's another question. What type of shares are you interested in if you take an equity position?
So it depends on the deal. So every co-op is set up different, and there's so many different types of co-ops. It's really deal specific. So if there's something more you would want to dive into, I'm happy to have that on a one-on-one conversation about the equity. So if there's no more questions, what I would really encourage you guys to do is I would encourage you to, I'll have Seth share the actual slide deck that was presented in here. I will have Seth share that, and I would take a look at, do an exercise with your board about what you're looking for in financing. So so you can look through the list that's in there and see if these are documents that you have, or if these are things that you need to work on. Also look at if your project is is more of a 10-year project, looking at breaking it down into more of what bite-sized increments. That's another exercise. And then I'm also happy to have one-on-one conversations on specific topics if that's more helpful for you.
Excellent. Great. Well, Christina, again, thank you so much for sharing all of your expertise and for sharing this resource with the folks on the webinar. I can imagine there'll be lots of people wanting to reach out to learn more. Again, yeah, apologize to everyone with the confusion on the time. I think we made it through, and that'll be sharing out. Just a couple of notes. So you will be receiving can we share the slides as well?
Yeah, absolutely.
Great. Okay, so we'll have the slides, this recording. I think that there's some tools in terms of following up regarding, how do you get your co-op in a position to be able to receive capital? And I think that even that process of taking the test of how's your board, how's your management team, what's the market looking like? I mean, this is a great check-in and check-up for your co-ops, or to see if your business plan and your development strategy is on the right track. So I think it's always a great, it's never a bad time to be able to check in on that. There's some great resources, definitely with Christina, the ACCA. I mean, we're always here to chat about that. Another thing I want to mention is we have been talking a little bit about opportunity development co-ops, and I know that there's a number on the line here in Alberta. These co-ops are basically investment co-ops. They pool capital within their local community through the sale of RSP and TFSA eligible shares to invest in local business development. So basically, they're co-ops that allow for individuals to participate in local economic development. Some of you might already be familiar with them. In the email that I send out with the recordings, I'll also include a little bit on that, because I think that that's definitely an emerging space here in Alberta. When we're talking about co-op capital, we're often talking about local investing as well. So that's something that we definitely be doing in the new year. And if you have any questions, please send them our way. I want to thank everyone again for participating. I hope everyone has a happy holiday as we wind down 2019. And I look forward to continuing this conversation into the new year. So with that, I will be signing off. And again, a big hand to Christina. And yeah, 2020 is going to be a great one. So I'll let everyone get back to your day, and we'll be talking soon. Take care. Bye-bye.
Thanks. Bye, guys.